Corporate tax is the tax on corporate earnings. Corporate tax in Turkey is calculated over the net corporate income earned by the taxpayers within an accounting period. What are the corporate tax rates? Corporate tax in Turkey will be collected at the rate of 20% over the corporate income. What is the subject of corporate tax? According to the first article of the Corporate Tax Law of Turkey, the source of the tax are as follows. Capital companies, joint stock, limited partnership companies whose capital is divided into shares. Cooperatives. Economic public institutions. Economic enterprises belonging to associations or foundations. Unions are considered as associations. Communities are considered as foundations. Business partnerships. As a result of the mentioned elements, corporate tax in Turkey is very important for the entrepreneurs who are interested in company establishment in Turkey. What is full obligation and limited liability? Full corporate tax liability is the tax liability of the companies which has their legal and operational center in Turkey over their local and global earnings. The limited tax liability is the tax liability of the companies which has not their legal and operational center in Turkey over their earnings only from Turkey. The legal center is the center indicated in Article of Association. The business center is the center where activities are managed. Corporate tax return in Turkey. The corporate tax return is submitted to the tax office to which the taxpayer is affiliated. That is the tax office of the place where the legal or business center of the institution is located. It is given between the first day and 25th day of the fourth month following the month in which the accounting period is closed. Each taxpayer submits a declaration for all of the taxable income. In other words, a separate declaration is not submitted for taxpayers' branches, agencies, buying-selling offices and shops, manufacturing plants, or other workplaces affiliated to them, even if they have independent accounting and allocated capital. Loss offset. Losses arising from the commercial activities of the institutions can be deducted from the earnings arising in the following periods. In the corporate tax return, the losses in the declarations of previous years can be deducted from the corporate income, provided that the amounts for each year are shown separately and not transferred for more than 5 years. Payment of tax. Corporate tax is paid by the end of the month in which the declaration is submitted. It is paid until the evening of the 26th day of the month in which the declaration is submitted. In addition, payment can be made with contracted banks. Since the taxation is one of the most important elements of the profitability of the company, entrepreneurs are very sensitive for the tax regime of the country. Corporate tax in Turkey is the most fundamental element of the tax system of Turkey for companies. In this video, we provided brief information with this regard. For comprehensive information on the tax system of Turkey, please reach us over WhatsApp or email.